The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And this is the second day of October and all-time highs in the Dow. Amazing how that just worked out. In fact, I said to subscribers this morning, based on the 120-minute chart, let me just show you what I did for my for my opening call subscribers. I said that we've made a Chapman Wave Peak C in the 120-minute chart. There's a Chapman Wave 3. We're in 4 down. I was thinking that maybe this is the time just to go long for that leg D, but it was very difficult to know where to get it because the market was down earlier on. It was a little tough for me to give it a precise entry point. So I said, we'll just have to see what happens. But it must go above 26,737 to start a leg D. Well, look what just happened. We are now in leg, whoops, let me move it over here. This is it, leg D in the 120-minute chart, leg D, with good MACD and moving average convergence divergence, and the stochastic has popped up to 83%. And that makes it, now I can go to the daily chart. In the daily chart, this makes a brand new leg E with an M-shaped pattern in the MACD in the daily chart. Stochastic is still lagging. There have been divergences all over the show. Question is charts. I'm actually not sure whether the picture is on. Yep, the charts are there. Okay, good. So the charts are right there. I can see them. And what we're really looking at is the weekly chart still has a very strong MACD, and the stochastic is very powerful at 95%. And that takes us now into leg G/C. And the way I'm looking at it, I have to consider that this is more likely a C in the weekly chart, and that's very positive, at least for the first week or two of October. And now that's extended the arch from the cup formation in the weekly chart and the monthly chart. And you can see even here, the 120-minute chart's got this cup formation. So let's go on and give you parameters, because now the key support is in the 26,600 to 26,500 level. Whatever happens, if there's a break under 26,500, we will see how the rotation works, and I'm going to get to that as we move along. Because look, the S&P SPX.X is, it was lagging the Dow. It's still lagging the Dow. It's up 6.44.22%, Dow's up 0.51%. Hey, look at this. You've got another cup formation right here. Cup formation there. It's not as powerful. The stochastic is very weak at 66%. The MACD hasn't turned up. And you've got a G/C. I think we're going to just sneak over the 2940.41 area at some point to make that leg D. And then we're going to have to see where everything else lies. Key support now is at 2931. Key support is at 2903. A close below that at any point in the next 2 weeks, very negative. Now we're going to get to the issue this is part and parcel of what we've been looking at. The QQQs have been kind of in the middle. The Dow's suddenly taken the lead. The S&P's kind of following. The Qs have been lagging. And the IWM has been the weakest, and I'm going to show something that I think might be very interesting here, because the QQQ series is at 187.06. It's just like an eye blink away from the 187.53 high that was made just yesterday. So I'm watching this closely because the stochastic's at 84% in the daily, and the MACD is starting to expand. Weekly chart is still not so great technically, but the price is the price. It's in this Chapman Wave inside track. Repellent zone is still acting quite well, and the monthly chart is very good. Now we're going to get to the IWM, which I think has just made at least a short-term attempt at a rally. So let's go there. The IWM, which is the Russell 2000 ETF, trading down 84 cents, down 51.51% at 165.49. Made a low this morning of 164.91, so it's slightly above that. This is a leg after the downside. It took out the left side low of the 15th of August at 165.15, which was quite an important candle. It's taken it out, but will it close above that? It looks so far kind of like it's going to try to do that. Most importantly, that weekly chart says that there I don't see an alternate count. I see a G and not an alternate count, G/C. And the monthly chart is going to be very important. Comes, I'd say, give it maybe 2 weeks, because if it closes under 158, first 162 would be very negative, the 9-period moving average. But wow, if it closes under the 14-period moving average of 158, that's a real problem. Now, this is going to be very interesting. Look, gold, evidently there was a bullish report by Goldman. So Goldman has gold in the name. So maybe they kind of got attracted to that. I'm not sure what it is with them, but they said gold, I believe they said gold is attractive. It popped up to, let's see, it went to 1,212. It's trading at 1,208. But yesterday it closed at 1191. So this is an external news event. I don't know how it's going to affect, because we've still got to wait until Friday, the weekly chart. But that MACD is trying to turn up. Prices not really moved very well. Stochastic has been having a divergence, so-called positive divergence, for a while. But and if it wasn't for this report this morning, the dollar this morning early was really screaming up. It went all the way to 95.74. 95.74 was the exact high of the 4th of September, when it ran from a trough B at 94.43. And it ran for about 4 days up, and then it pulled back, tried to retest, failed, and then dropped sharply to the low of 93.81. We remain long from 90.07 via the UUP. This is all part of that pattern. Look at this inside Chapman wave, inside wedge, target, left side, right side price time match. It got it exact. It actually got it exact, but 2 days early. So far, at 95.43, up 13 cents. I think this is very nice. We've already had the Chapman wave stork leg formation in the weekly chart. There's the leg, there's the oval, yellow oval body, there's the neck, here's the beak. Beak did not take out 93.71, not yet anyway, and that's a positive. And then what happens is that when there is a turnaround in this particular pattern, there's a powerful move to the upside, and then you're on your own. Right now, we're on our own, and we're going to see what happens. Why? Because if you look at the GLD, this is the gold. This is really the trades at a tenth the price of spot gold, trading at 30.98. Ran all the way to 140. So far, it's just in this. There again, like the weekly chart, rectangle formation, it traded the 150 area and closed it back. That was up 120.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back. So I'm looking at the euro-dollar currency pair, made a peak D in the Chapman Wave. Remember, peak D is where other things can happen. Goes to just over 1.180, and now it's trading at 1.155. Well, if gold is really going to break out, then you're going to have to, not you don't have to, but most likely this is going to change. I don't see it change very much. I still see weakness in the euro-dollar, especially the weekly chart. This is not a good pattern. Let's see what the USD JPY. That's the euro. Let's go to the yen. Yen is the USD JPY currency pair. Making a little peak E after a massive move, just a whopper of a move straight up. A little overbought. It's at 113.67, goes to 114.11 yesterday. 113.67, just a minor little pullback. I think it pulled back a little bit more. The MACD is really strong. Stochastics at 94%. That's very good. Leg D in the weekly chart. MACD is good. Stochastics now just turned up to 80%. That's nice. And the weekly chart is broken out. But the monthly chart is broken out, but I need at least another 2 months to see whether the 111.52 downtrend support is going to hold. And it's actually about 111.54. Sneeze, can't believe it. All right, sneeze. US dollar, Japanese yen, monthly chart. This is the trend line resistance. Go on to a leg C in the monthly chart. What is going on here? Let me just. There you are. Everything's good. Okay. So let's just see. At 113.67, it kind of needs to get to 114.50 for a weekly breakout of consistency, or at least has to hold 113 on a closing basis by this Friday. Consistency of seeing the MACD in the daily and the MACD and stochastic in the weekly very strong, and the monthly chart is starting to rally nicely technically, but I really want to see this continue for October. We'll watch this closely. Now, this is going to be very interesting. The TLT, which is trading right now up a little, it's up 72 cents, still stuck in this range right here. It actually looks like the gold for a moment, and the weekly chart is just seeing a little technical improvement in the price, Not so much in the technicals because the stochastic's flattening out, but still low at 13%. MACD's got a very wide distance between the slow and the fast moving averages. The monthly chart doesn't look good. This is going to be a really important moment for the TLT. The 116.87, it needs to hold the 116s. If it closes under 116, let's go to the TNX for the first one. That's the 10-year, and the 10-year right now is made a peak. I think this is a peak F. It looks like a peak F top at 31.10 on the 25th of September. It's just in a trading band here, making a kind of an arch, a rectangle with a cup formation, which might lead to an arch. Three definitive combinations of patterns in the weekly chart. But so far, all that's happened is it's gone from the high to the low, from 31.15 to 27.59, and come back to the 31.10 area. Hasn't gone to a new recovery high. That would be leg D above 31.10, 31.15 in the monthly chart. That finally will get you a leg D in the TNX 10-year T-note yield. Now, a couple of things I was asked about. Let me go to crude oil. This is the Fred breakout crude oil. Leg C should still go to a D. Very strong MACD, very strong stochastic at 90% in the daily. Weekly's improved a lot technically, but the stochastic's still only at 75%. But that monthly, the MACD's good, and the monthly chart has got 90% for the stochastic. That is very good. You know, I was so close to buying the USO. Remember, I discussed it on air, just decided not to do it, but what a move. Leg C in the USO trading at 15.88. We were looking at it down in the 1450s, I think. Nice move. Leg E in the monthly chart. A couple of things now that I wanted to talk about that it kind of came up, and I think I'll deal with it right now. Where was it? The first one was, yes, Boeing has gone to an all-time high. It is in leg D. It's gone to a leg D in the weekly chart. It is in a G/C in the monthly, and everything about it says probably that's a C. The pattern was absolutely correct. The stopping point at 300 and what did I say it was? Should be at 370, one-ish area. Should be the resistance. No, it's at 386.71, up $4.42, up 1.16%. A big part of the down move here is Boeing percentage-wise. This is really impressive, and I have to tell you that the MACD in the weekly chart has just turned up, and the stochastic's at 85%. Question was Boeing exhaustion. All I can say is it's a spectacular move. I never expected it to go to a new high. I thought it would stall right here in the three, or maybe a new high, but only by like a point and then fail. This is really good action. Totally wrong about Boeing. Thank goodness we're not doing a trade on Boeing, but yeah, totally wrong. What was the question? UTX and PPA. Yeah, UTX, very nice action, up 88 cents, 141.80. Still long. It's got this cup formation. I'm a little worried here because if the MACD starts to turn down here and the stochastic's only at 66%, we won't get that leg D in the weekly for a little while. If it breaks 138.20, key support is at 141.81 right now. It needs to get to 144.16 for the monthly leg E to continue higher, and also for a leg D in the weekly chart. And then I'm going to look at it and say, okay, now we've got to be somewhat careful. That's it. Oh, MDY is what I want to look at. When I was looking at the IWM, the next thing was going to be MDY. MDY has gone to a leg E to the downside. This is the mid caps. So what I said to subscribers this morning, Dow's leading. The IWM is very poor with the MDY, which is the mid caps. And that kind of divergence can go for a little while, but at some point there's some catch up. One goes towards the other on the upside, or the strongest comes down to join the weakest. So we're going to be watching this. I can just give you parameters. It's at 363.88. This should be turnaround day for at least a bounce. If it isn't, there's a close under 360. That low of the 15th of August at 358.67 becomes a target. Whew. That'll be a real quick move to the downside based on the arch formation. But we'll see. And on the upside, it needs to get to this. The MDY trading at 363.81, down 71. It needs to get really, it needs to get above 366. It's got to tag the 9-period moving average in the daily of 367.04. It's just got to get there very soon. Otherwise, there's a real problem. Right, we got a chunk of stuff done. I had some other questions. I had a couple of leftover questions from yesterday. Let me just see if I can find it. 2 of them. I did that. Oh, yes, there comes a break. I was asked about the different sectors. Would I care to go through a couple of different sectors? If anyone wants to post any sectors in the den, or that's fine, or send me a question about sector. I'll go through some sectors as soon as we return. The estimates are wrapping here. We are out. We're not long. We're not short. Watching it very closely. It's important for the semis to move here if this rally is going to continue. I'll be right back. 1,120.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. If any of you remember 2007, we were talking about commodities. Moz, which is the Mosaic company in the agricultural area, I think it is, had a spectacular move. It went from like the 20 area to 161 or 2 or something crazy like that. 163.25 June of 2008. Peak D in the monthly chart. Comes back down, makes a huge, an inverted bowl formation, which is not very good. And the 200-period moving average is at 37.16. And it's trading right now at 33.06. So the question was, I sold some of my MOS just now. Bad move, Basil. You've already sold it. So no, it's me. You just did it. This is a leg F in the daily chart as I'm enumerating it right now. The MACD is good. The stochastic's at 84%. That's very good. I can see a pullback. If you're thinking that you sold it because you're going to buy it back from 33, it's going to go down to under 30 to the 29s. That's one thing. But I would, I think it's got good support. Leg E in the monthly chart, in the weekly chart, the 31.51. Is both the 200-period moving average and the 9-period moving average support. 30.65 is the 14-period moving average support. And it's just leg B in the monthly chart. It would be great if it had broken the last peak B minus February of 2017 at 34.36. So, yeah, you got out, but I don't know how much you sold. If you sold just some, I would say that, yeah, you could. Let's see how it pulls back. And give me a yell when if it can get to 32.15 to 31.80. Let's assess it right there. That just might be a re-entry point. I'm not sure with taxes and all whether it's worth. It's a bit of a bother more than anything else. But if it's a long-term position, 2 points is very nice to be able to get it lower, 2 points lower for a new position. So that's a Moz. But if it breaks at any point to this, it's a 33. The 33.53 high today, if it takes out 33.92 to 34.07, somewhere like that, if it goes above that area, that's going to raise the stop. In the meantime, it's in a sector that seems to be working. Question, Fletch wants to know DBA. DBA, we usually go for DBC. We just missed it the other day. I had it and then we didn't get it and I didn't jump back in. I like DBC better. DBC, because it's a commodity index, but it's geared more towards the crude oil. Now DBA it's more agricultural. See, DBC went from the area I was looking at was in the 1750s. Now it's at 1839 leg C, trying to test the left side high that was made back in April. No, it was May of 18.47. It's at 1839 right now. The DBA, maybe the DBA is just starting a new buy mode right now in the weekly. This is kind of more like the gold chart. It's actually a much nicer chart because this is leg B now in the weekly chart, and it's gone A, B, C. Oh, it's a leg D in the daily chart, but very nice action. Okay, so the question is, can I have a look? I'm in at 16.90. Oh, well, if you're in at 16.90, then I'm going to say to you, the whole area of 16.80 to 16.80 would be the area you'd start looking at to see whether you want to get out. My suspicion is, because if it breaks under that, then it's a problem because it goes even lower. But this is the area where it's building a base. And I'm going to say, Fletch, that at 17.26, I like very much what it's doing. I just can't remember exactly. I used to know it quite well, but now I'm a little fuzzy. I do know that the DBC has really crude oil is a pretty big part of it. It has a bigger move when it has the crude oil, and the DBA is a little different, as I think it was more agricultural. I like it very much. I'm just going to say great entry point. If you're in at 16.90, the way I know that you like to do it, you like to be convinced that it's doing something, and then you will add to a position, whether it's short or long. And I'm just going to say to you, if the candle low of today of 17.08 is not pierced from now until this coming Monday, not only will be that very impressive action, but it would say to me that it's allowing the MACD in the weekly chart to start to cross positive for the very first time in really weeks at least, weeks, since it went negative back in June, the week of June the 15th. So that would be very good. Nice move, good entry point. If you treat it as an entry point, a starter point, that's the best thing. If it just slowly builds support, and the next thing you know, it's tackling the high of the 20th of August at 17.46. then I think that would give you a lot of comfort and will say, you know what, over both the 9 and the 14-period moving average in the weekly chart, that's the best action that you can expect. And as I say, below 1680, it's a problem. It's a problem of time as well as price. It's agricultural. Yeah, no oil. That's what I was thinking. It's good. Okay, so I agree with that. What does it say? SFIX. Yeah, SFIX is one that we liked. Soon after it was an IPO, we got in just for a moment. Then I got out, and I just kept watching it go up. There are so many stocks that have done that looked a little bit shaky, and then when they broke out, they just kept going up and up and up. It went to a peak D to the 50, around about 53. Gap down is at 30.33 right now. Not very good action at all. So yeah, be real careful with SFIX. Made a peak E in the weekly, only a peak B in the monthly, but boy, something's not healthy there. Now, I wanted to go to EWH. EWH is actually Hong Kong, I believe. I don't think I've got it notated recently, but I do. Peak D made in January of this year at 26.93. This is the iShares MSCI Hong Kong ETF. And what's really important about it is it hit the 200-period moving average at 22.73 4 weeks ago. It bounced up nicely. It's kind of shaky. I would prefer to go to this. This is the HKDOW. This is $HKDOW. It's the same chart, but I've got much more information because it is the Dow Jones Hong Kong index. And this is funny. I went through this so many times. I couldn't even find two parallel highs. I get this only at a peak C in the monthly chart. That should be very bullish longer term. But this is what I'm looking at. 538. Yes. So now I'm going to go back to yours. So it's EWH because I just wanted to check the two. I wanted to get a sense of the so peak D in the monthly chart here. I'm probably going to stick with that as a D because it certainly has pulled back sharply. I'm going to be watching this closely. You remember what I said? When we were down to 23.22, I said the EM, FXI, that's China. I'm putting them all, I'm lumping them as overseas stocks, stock markets. The FXI, yeah, they could bounce, but you got to treat it only as a bounce because that's all I can see at this particular point. And I'm just going to say EWH, treat it as a bounce, and you can keep trading it between the range between 22.60, 22.80.60 and 24.20. And when it gets to the upper part of the range, it tends to want to come back down. And when it gets to the bottom, it tends to want to go up. So treat it with a lot of respect. I wouldn't get too carried away. Hope that helps you. I'll be right back after these important messages. Now the Dow's at 141. All-time high, 26,793.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're back. So the question about Caterpillar trading at 155.21, it looks to me like 157.73 is going to be the number. It's going for a leg D in the daily chart, and that's going to be a really big. You remember we were looking at the way it's broken out from and did it so suddenly, the downtrend line. Now I have to consider that this is in fact a leg B with a good chance that it's creating a tremendous support at 155 right now. It's tremendous support between 147 and 146 over the shorter term. That's very important. So Caterpillar, yep, good. Question I had about, let me go in order. IAI, well, the question was the XBD, but I'll do the IAA. IAI is trading at 62.08, and that's really look at the way it's look at these A, B, C. This is D or E on the way down. Stochastics at 3%. I mean, what's going on here? This is the iShares broker-dealer securities. Don't tell me people aren't buying anything. How's the market going up? Is it just fund managers juggling money around? This baffles me. At this point, if you say the Dow's at an all-time high, where do you think the broker-dealers are? I would say, wow, they should be rallying very strongly. This is, besides being weird, something is strange because Schwab down 3 cents at the lows of like a 52-week low. Let's go to Ameritrade, TD Ameritrade. At the lows right now, no, right, 52.24, and it was at 62s back in March. Hey, I don't know what's going on here. So this is very crazy. This is really different to what I normally would be looking at. Okay, next question is, so that's says it better start a rally from here. We did the EWH and did the Boeing, did UTX, did PPA. Well, that's the here we go. This is the Power Shares Aerospace and Defense area, lagging a little bit off the 61.91 all-time high back on the 19th of, 61.91 back on the, that should be the September the 19th, making a U-shaped pattern. Kind of struggling here. Got to watch this closely because, hey, I think there's more peace than war going on. So let's see what happens with this whole area. Aerospace defense ETF trading at 61.72. Hey, it's just barely under the previous high. No, that can't be right. Can it? 61.92. Just 23 cents, and it breaks the new high. Well, that's what it is. Next thing I'm looking at here is XL. Yes, IYT. No, there's a difference. Remember, the XAL was looking very weak. The IYT has started to pull back, but it's still closer to the highs, all-time highs than the XAL. Yeah, but it is giving me a divergence. Yes, again, yes, another big divergence. So it's very specific stocks that are really helping the markets move. Yeah, Fletch, you said low commission trading, but they're in business. How are they making their money then? That's going to be the issue. That's really what I'm saying. The brokerage business. Okay, Triple M. I didn't look at Triple M. What is that? Up again? Yep, up $1.90. It's improving. Like Caterpillar, this could be my 3. Used to be 4, but now it's 3 Dow stocks. IBM, Caterpillar, and UTX. No, no IBM. Just Caterpillar, UTX, and Triple M. Those are the really big ones. That's part of the country. IBM is in the select area of information and computerized work, and this is a little different. This is real things, tangible things. So that's different. XLI, you know, the XLI I spoke about yesterday. Nothing's changed. XLI is up 5 cents. It's kind of failing, and that says to me I've got to watch this very closely, because the daily says this is a very big divergence, and the technicals are failing. And if there is a turnaround at any point, and it's 79.12, there is a close below 77.75 in the XLI. I have to consider that's a failure pattern. You're going to have your 1-to-1. This is the Tiger family. Lightning bolt, A to B equals C to D. It's got nothing to do with troughs. Well, it does, but it's called the lightning bolt with A to B distance, and the rally up to a C says that C to D should match the A to B decline. So watch that very closely. XLI needs the 80 area, and it needs it really soon. Otherwise, it's going to fail. Oh, what an interesting market. Okay, I think I covered a bunch of questions there. ACWI is ACWI. I don't know what it is. MSCI, ACWI, got something to do with one of those indexes, world index, I guess. All I can say is that it did make nominal new highs. It went to A, B, C. That could be F, G. I'll watch this closely. In the meantime, back at the range, I know this chart. I know it so well. Why am I looking at it and saying, what's going on? NYA, does it have anything to do with that? Let me see, NYA. Yeah, there it is. Okay, so this is the New York Stock Exchange. It went to peak C or something in the daily, but look at the inside bar. They went A, B, C, D, E, and this F is struggling here. New York Stock Exchange is not following. So there are a lot of divergences going on. Doesn't matter. We're trying to be as independently thinking as possible. We still have the long position in the steels, still long in the IBB. I was asked about the IBB. Yeah, the IBB is down today. It's down 74 cents. It's stuck to a new recovery high. For now, I'm going to call this a D. I'll give it a little time before I can make any adjustments to that in the daily. And this is an F in the weekly. Hey, maybe it's run its course for now. This is a, is that a G? That's really unusual. A monthly G. I'm putting a G, but I think this is recycled higher. IBB is the NASDAQ Biotechs, trading at 120.43, down 61 cents. It's just been a steady winner, and then it has a sudden sharp pullback, but it makes higher highs and higher lows. Not altogether, because the all-time high, remember before the split, 133.68 was up in the 400 area. Can't remember what they split it for. And then it plunged to 80. So yeah, this is a really nice retracement back towards the high. Will it make the all-time high? Eventually, I think it could. Okay, so wow, we just got a bunch done. I'm looking around. Yeah. So here's what I'm really looking at. Okay, the VIX index. Finally, I want to get back to the VIX index. The VIX index is down at 11.76. Look at the number of weeks. It's going from May, the week of May the 11th. There has been only 1 week where the price is closed above the 200-period moving average, which is now at 14.22. We are getting closer and closer to the VIX index rallying sharply, but until it can hold a rally, it keeps popping for a week, intra-week, and then closing towards the lows. I'm looking at this and I'm saying, until I see the VIX steadily pushing towards 1372, the daily 200-period exponential moving average resistance. Until it does that and holds, I think there's going to be this rotational buying. So I'll be back in a moment. The Dow is now only up 106. S&P's up 250. Fascinating market. We just made an all-time high in the Dow. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Everyone, so remember yesterday I spoke about this chart, this very long-term chart, just to give parameters of what I'm looking at, where the resistance is, going all the way back from the low of 1987. There's this trend line that moves up. I know Steve did it. He used a different, I think, log method of looking at it. But this is just a 1-to-1 ratio. So this is what I'm looking at. So if you're interested, and a number of people have asked me about it, and I said I would send it to you. Send me an email, Basil Chapman at TFNN.com, and I will send it to you. It's not a prognosis yet of 2019. I've got that, working on that, but it gives you all the parameters that can go towards 2019. But it tells you exactly where we are, what I'm looking at, where the resistance is, and what's happening with this very steep angle that we're at in the monthly chart. The baseline of the uptrend, the up channel, is really about 80%. That's very high. Okay, so this is what I'm looking at here for the end of the day. Remember yesterday I said if we give back a chunk of the gains, that could make make for a weakish close. Well, we did pull back, but it's still held pretty darn well. Today we've gone to an all-time high I'm calling this leg E in the Chapman wave methodology right now for the daily chart. MACD is good, not great, but it's good. Stochastic is not very good. It's a 74%. So there's a divergence. Price is price. If it moves higher, it moves higher. It doesn't matter about the technicals, but I like to look at the technicals to give me some inside information and some insight into the machination that's going on. On balance volume is confirming very nicely this big move to the upside. So that's that. In the weekly chart, as I say, the technicals are still in almost all the indices. Technicals are very good, just flattening out somewhat in the QQQs. So as it stands right now, we're looking to see how if there is follow through, if the Russell 2000 is able now to have a rally, maybe the Dow pulls back for a couple of days and the Russell rallies. We haven't seen that for a little while because the Russell has been so weak. So keep in mind a rotating market, very selective. Boeing's a big part today of moving the Dow. Very selective. The price is price. Got to respect that. Have a great day. Stay tuned for Steve. Stay tuned for Dave. And stay tuned for Tom. I'll be back with Tom a little later on this afternoon. Have a great day.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.